Good morning to you who attended the workshop on trend trading. This is Taz, and if you haven't gathered that by now by my voice, still got a bit of a weird voice, but nonetheless, thought I'd come onto the mic and have a chat to you to simplify what was complicated subject matter for you on Saturday, right? So, in this short video, I'll explain to you what it is that ultimately you need to do to identify the trend, right? We went through a lot of complicated stuff, and it doesn't have to be complex. Remember, we're using Fibonacci simply to give us measured levels of where the part of the trend we think we are currently in is actually at, and therefore, logically, and with higher probability, what's next. So I'll explain how to use Fibonacci on TradingView, not what Fibonacci is. That's not important. You can look that up on the internet after all. Then it will make sense when we talk about trend, i.e. pulse action moves 1 to 5, the trend, okay? And zigzags, the counter trend in this case. All the other stuff, i.e. patterns and the other forms of trend or counter trend, can present themselves somewhere in, I beg your pardon, all the other patterns we spoke about can present themselves somewhere in the trend, i.e. PAM 1 to 5, or in the counter trend, i.e. zigzag. We'll go through that now. Remember, there are two main trend moves to master, okay? Or one main trend move to master, and that's PAM 1 to 5, moving with the trend, and the counter trend to master pattern is the zigzag, and then moves counter the trend. Again, we'll go through that now. Remember to study your handout for more clarity on the details of what I've just said, please. You can make it as complicated as you want as a person, or as simple as you want. Some people need complexity and details, and some need the simplicity that I'm going to give you in this video. This is what I wanted to cover with you in the last part of the workshop, but unfortunately couldn't get to you on Saturday because of the makeup of the workshop attendees, understanding on trading, despite the, of course, polls taken. If you've been trading for many, many years, you could expect a certain level of understanding. Became clear that wasn't necessarily the case, which is not important. I'm going to resolve some things now for you. It was an advanced course, obviously, but in this case, I'll give you the clarity, in other words, the basics. So open TradingView now and follow along, right? First thing I'm going to show you is Fibonacci, as I said. So on TradingView, just open your TradingView, you'll be on your chart, and 1, 2, 3 from the top, you get a whole bunch of tools. Look for fib retracement, okay? Just for the first time you use it, okay, you're going to take it, and what I'm going to do now is before we do that Fibonacci stuff, I'm going to show you something else just because of what I've done on my chart. Okay, I'm going to bring it all back now, and I'm going to explain it to you just to save some time. Okay, I've labeled up the chart already for myself, and now we're going to talk about Fibonacci. All right, so don't worry about that. So the first thing you're going to do, again, is you go onto TradingView, 1, 2, 3. You find a bunch of tools. Look for fib retracement, not trend-based fib extension. Okay, that's not required for the purpose of what we want. So use fib retracement. Okay, now here's the important thing. So you've clicked on the tool. And just look at the candles, the way they're going. These candles are going down, these ones are going up, right? So if you wanted to measure in Fibonacci these candles moving up, okay, in other words, what comes after this, then you would click, because these are moving down, you start from the bottom of this move and you'd end on the top, and that you'd be measuring what comes down, in other words, the retracement. Okay, let's do it in the opposite direction. If you wanted to measure what's going to come, okay, so in other words, this hasn't happened yet, but this has, then the opposite is true. Okay, you will take it from the top of that to the bottom, last candle, and that will then give you the measurements for what comes next. In other words, the extensions. These are the retracements, in other words, moving down. These are the extensions. So that's how you would apply Fibonacci very simply to your charts. That's all you need to know at this point. And something else you need to know, on TradingView, there'll be default levels set. So whatever it is, just randomly click it on your chart. It doesn't have to be anything the first time you use it. Just kind of randomly click it on candles like that so that it's on your chart. Click somewhere else. Now you've got it on your chart. It's random because you want to double click on any one of those Fibonacci lines and open it up for the settings and put these settings in, as I said, in the workshop. Okay, then you click OK, and it will now be saved as your default with these settings. You can always go in it again to check that happened. If it didn't, you can go here and you can go save as and make sure that you always use that, save as trend trading or whatever you want to do. Click OK. Now you've got Fibonacci the way you want it. That's all you need to know. Now, let's talk about what the workshop was about. It wasn't about Fibonacci. Okay, it was about trend, but we're using Fibonacci. So of course, I will bring that into future workshops, just like to clarify what I've just done right now. I kind of alluded to it in the workshop, but it may have happened too fast for you. So I'll slow down in future. Okay, so that's Fibonacci for you and how to apply it to a chart. All right, and what you're trying to measure. That's clear. So now, let's go to the very last candle, right? That's this one right here. So what do you want to do as a trader? Well, now take your guide and go to page 1. I've told you what you're trying to do now is you're really trying to identify the trend or what's happened so far, depending where you are on the chart. Okay, in this case, this is a live chart of Key Corp. And for people that trade dark pool, that's basically institutions have done something, they've come into the market at these levels. You wouldn't know if it's a buy or sell yet. You don't need to. As a trader, you've set your buy aboves and your buy, your sell belows, etc., or whatever your style of trading is. Hopefully, you know where you're entering. I'm not covering that in this workshop. Clearly, it's about trend. So let's get back to trend. Go back to your first page and you'll understand that there's only two forms of a trend pattern. One is the standard trend, okay, the primary pulse action trend move in your handout, and the second one, which is all trend, is the diagonal. Okay, so in this case, it looks to me like we just have the primary pulse action trend move. That's fine, and that's exactly what you're trying to establish as a trader, and it's what I expect you to think to yourself. You could say, yeah, I think this actually at the moment, it looks like a primary pulse action trend move. That's fine. The first thing you do is label it up like I've done. Okay, then what would it be? 1, 2, 3, 4, 5. That's fine. Okay, now you can go as deep into this or as non-deep or as complicated or as simple as you want. You could just, for yourself, you're not a precision trader and, you've got money to lose, then you might just label it up 1, 2, 3, 4, 5, and that's enough for you. But if you want to, measure it up and make sure that this, in fact, is not a diagonal, okay, and then you're looking for a primary, it won't make much difference because you've already had your corrective move here. In other words, your A, B, C in a zigzag. You are assuming a zigzag. You are always assuming a 1, 2, 3, 4, 5, okay, i.e., and it's not a diagonal, so you always assume when you look at the chart that it's a primary pulse action trend move in a 1, 2, 3, 4, 5, i.e., it's not diagonal. Okay, this is you opening your guide and listening to what I'm saying now. So we're looking at the same thing. And you always assume that this corrective move is a zigzag. If it's not, then it can only be a triangle or a flat. Okay. Now, this entire move doesn't look like it is a triangle to me. Okay. It looks like a zigzag and then something happened. And we'll cover that right now. Okay, so that's what we're doing for the sake of it. So all that you've done at this point is, remember in your guide, I said a little bit later on page 1, keep it simple, to-do list, trend tech analysis, top-down approach. Well, start on a weekly, make sure over here log chart is selected. Okay, because log chart is great for seeing the trend. So I've just put on log chart. I may take it off when I'm actually trading. I don't use log chart for actual trading. for my entries, in other words, but just for this exercise. Now, this is supposed to be a quick exercise, and once you've nailed it, it will be. This is, minutes. Okay, you'll get it 1, 2, 3, 4, 5, and you'll measure it out, and that's it. Initially, it might be a bit longer, so give yourself some preparation time. Use it in your prep time for trading. I hope you all do prep time for trading. I trust you do, and I trust that even if you're a trading day trader, 5 minutes, you still do your preparation. If not, you're gambling, as we said, right? So at this point, identify the core patterns. That's what you've done. And now I'm reading basically from your handout. Look for simple trend patterns first, i.e. 5 up, primary PAM. Well, we've done that. Okay. If not, price action will tell you, because if not, then what could it be? Yes, the second one. It's going to be a diagonal, right? So then assume 3 down in a zigzag. Well, I've assumed 3 down, A, B, C. That's what I did. But I also noted that there's a triangle here. Now you'll notice that in the workshop, I said that in B, you can get a triangle forming, or in 4. Okay, in 4, yeah. I beg your pardon. So we'll go like this. This is always 1, coming down is 2. That's 3. This is 4. So a triangle will normally appear in 4 or in B of the retracement. In other words, of the primary trend move, the pulse action move, 1, 2, 3, 4, 5, you'll find a triangle pattern in 4. Usually, it doesn't have to be, okay? But usually. So I'm going to go with usual and usual assumptions. I don't have all day as a trader, nor do you. So that's what we do. And then normally the triangle will appear in B, and well, in this case it has. It happens to be abnormal. It's not symmetrical. I don't care. It's got a big gap here. I don't care. I'm just establishing personally the trend. So I've got my 5 up, 3 down in the form of ABC down, and I've got 1, 2, 3, 4, 5. Now we get to exacts. Now you measure 1. Now, why did I start from the bottom of 1 to 2? I told you earlier in Fibonacci, because I want to catch the measurement of 2. And now look at my Fibonacci, and it says 50.05. And it happens to be a dollar value here on key of $10.68. Okay, a roundabouts. So it fits. Now, you'll see the wick's not exactly touching 50. It doesn't have to. These are thereabouts, and it's great because it can stop at 3822, wick down to 2, so it fits the parameter of 2. I'm happy. Okay, and you go through that and measure all those according to the actual explanations in your guide. You know, the levels for each one of these legs over here, or pulse moves. Then all as you've done is, with more exactness, you've now verified that you're really happy that that is 1, 2, 3, 4, 5. That's what you've done here. You've knocked out assumptions, so you are on high probability now. Okay? Now, further to that, if you're still not happy, go to the end of your guide. That's where the channels come in, not the last page, but on page 10 of your guide, you'll see. And that's where you could then check yourself out by drawing your channel line. Follow your guide for this, okay? And you'll go, this is just my magnet on. I'll switch that off. Okay, let's redo that for you. And follow the guide for doing this, okay? And you'll get something that looks like this. In this case, you're not touching anything, okay? It's been a bit short, so the price action here is a little bit strange, okay? You're going to get something like this. This was not in your guide. You're not going to do that, but the whole idea is you're going to draw this like that. You're going to realize it hasn't really come all the way down, but it didn't have to, so don't be too tied up about that. Okay, why? Because we verified that the Fibonacci measurements are great, so it's fine. It's an additional tool to verify that you're happy that this truly is the trend measured that you're looking at. Why? Because once you've measured that that's the trend, then it's going to help you for a trader for where you are, i.e. this candle right here. If you don't understand when you open your chart that this candle over here fits into something bigger, and where that fits in, you cannot with probability and certainty make your next move, which we'll discuss right now. So hopefully that makes sense to you now. Okay. Now you've got triangles in your handout as well, and the measurements for them are in the actual book. Okay. Now I've given you just a couple of I gave you symmetrical triangle, this happens to be a a different pattern. Okay, it is still a triangle pattern, but it's not symmetrical per se. It's got a flat top, so it kind of fits more an ascending triangle. Okay, in this case it's ascending, right? It could be descending if you actually pull this down. That's not, I'm not going to get into the technical definition of the triangle. So that's what I don't want you to do in this exercise, because you could be debating that with yourself all day long. So I've figured out, right, I drew a line here and here, found a triangle. It's weird price action, it really is. Got a big gap here. But it's generally fitting the pattern, okay? And it has had an ABC, and I've measured ABC out, okay? As a trader, you'll do that. You've got the measurement, the Fibonacci measurements, okay? So you would have done something like this. Again, taking A because you want the retracement, like I said earlier, not the extension. And you have basically found that I beg your pardon, what we want to measure here is B, okay, because we've got A, so you do it the other way around. So because you've got A, you're going to measure from the top down, because you want to see what the extension is. In other words, you know that B is going to go in this scenario, it's going to go in the same direction as the trend, right? Because the trend was up here. Now, we could flip this the other way around. Then all is you're doing basically is this. You got your 1, 2, 3, 4, 5 happening down because it's a downtrend, okay? And then what's going to happen is your counter trend is going to be like that, okay? That's what you're going to have, counter the trend, isn't it? And B again is going to be in the same direction as the actual trend, in this case down, right? So you're just flipping things upside down. But look at this, we're dealing with what we're seeing here. It's been an uptrend for a while. This is where people got caught out in 2021. Like I was saying, we were entering an ABC correction and everyone thought things were going to go on. The reason they did that is because, and this is why this method is so important to master, okay, is when you hear, you think it's going to go up for the rest of eternity. But if you've done your homework, you've measured it out but at this point and realize, okay, if this truly is the third leg in this trend, okay, because it's matching so far, then by the time forward completed, you have measured out and know that 5 will end somewhere, and there comes your Fibonacci leg, and that's where your probability comes in. You'll know that you shouldn't be in long trades beyond that, because that's going to nail you, and you should be preparing for the correction. ABC is coming next. Lights on for you right now. I can hear them, I can see them. Okay, now that is the clarity that I'm going to give you in this this piece, and what I want to do with you in the workshop. Now, there's a couple of other things now. Okay, and that's the basics. So I've actually explained to you what you're going to do. You go to you go to a handout, and you start with that first page. That's what you're doing. Okay, and I've showed you how to use Fibonacci and what the idea is. But now I'm going to show you the magic of it. I'm going to demonstrate the magic. We know that big players have come in on this thing called Key Corp. Okay, and we basically say to people, well, if the prices move below, and basically we'll say this, okay, most traders will have bullish above or bearish below. So I'll tell you, if it's bullish above, that's where I'd 1250 is where I'd look to enter. It's not exact. Everyone's got their own method to do that. So if you take it as exact, that's on you. Okay, you should know where you would enter if you were going long and where you would enter if you go short. In this case, as an example, we'll say we are going to enter bullishly above 1250. It doesn't mean I'm going to verbatim enter. There has to be confirmation on volume and other things, obviously, right? So in this case, we're saying bullish above 1250, bearish below 1150. 1250, 1150, okay? Now, that's a different thing altogether. That's entry. Again, the workshop was about trend, but let me help you one step further and connect a few dots for you. So if we're bullish above 1250, that's around about here. That's where we said we're bullish. And if we're bearish around 1150, that's around about there. So and the price action is here right now. So we're saying if it moves above here, I'd go long. If it moves below there, I'd go short. Fantastic. Again, this workshop's not about that. Right. wherever you want to go long or short, it's up to you as a trader. That's a whole different discipline. But here's the key. The high probability setup for you, if you chose to enter this market, would be long right now. Pause. Think about that. Why? Because you've already had an uptrend and the correction of it, which means that now players are coming into this market, and high probability is they might be going long. They might be buying here. That's high probability. In other words, I don't talk impossibility as a trader, nor do you. And that means that I'm not going to say it might go down. No, actually it might go up. That's the probability. But it's possible that might go down. Now you can talk entry and exits. So if it's possible it could get down, that's a stop loss. So now you have to determine as a trader, 5 minutes or any chart, where would I enter and on what? Well, that's your trading plan. And, I can give you coaching on how to bring all that together, and that's trading. You've got to bring it all together. But we're talking about trend. Now, this should be so enlightening for you right now. Now I'm going to give you my tasselator. Okay, this over here. And basically, well, it's green when the trend is bullish and it's red when it's not. Now, let me show you something. When you get to the third part of your move in a 1, 2, 3, 4, 5, you can see that bullish momentum is now confirmed over here, isn't it? And over here. So it fits very well. In other words, it's giving you confirmation that yes, this was the uptrend. Okay, and that you're actually in a 1, 2, 3, 4, 5. In other words, trend move. It's not something outside of a trend move. It is a proper trend move. Therefore, you can measure it out and know how to trade it during the entirety of that trend with probability. Of course, there's possibility that anything can happen. Okay, a war could come out, something else could change price action. Then price action will confirm that things have changed. Okay, and that's, knowing the limitations of every method that you want to use. But this is a great method if you want to understand where the next probable move is in your trade. Understand the trend. Trade with it. Now, most people are going to come in on a 5-minute chart or anything, come in on the very last candle, and they're already talking about, I'm going to enter, and they haven't even established what the probability of the next move set would be. Not the next move candle. Now, if you're scalping, well, you've got a different strategy. But most folks still get this wrong. Okay, they still haven't established that. If you are day trading, which I was told you do buy you in the workshop, most of you said that you're day traders. Well, day trading could mean, as we said, an open of 9:30 in the day and closing at 4. So the whole day, that's a day trade. You could go in for an hour, whatever the case is. So you would have still established the trend and done this. If you didn't, well, then how do you know what you're trading? You're scalping and essentially gambling. You have no precision and you're flying blind, really. So this applies, doesn't it? Okay, so now you can see my tasselator over here is telling me something else. It's measuring this momentum over here with some secret sauce, and it's saying, yeah, look at this. Predominantly red over here. That's fitting quite well in the counter trend move, isn't it? Obviously, but look at this. This means that C it may with probability mean that C is finished, but it hasn't fully ended yet. So now this is helping you as a trader to think, okay, I know what the probability of the next move is, but it hasn't told you anything about, and remember you're on a weekly chart here, about when you should enter. For that, well, follow your trading method and plan. Again, if you're not sure, come to me for coaching and we can sort it out. But now we're talking trends. So here's what I would do. I would wait, but I know that I would plan my setup here. My setup is telling me that probability is for a long trade here, and big money's behind it. And so I'm going to watch for that move to see if it's going to go down to noughts, to zero. Something else is happening. But again, that's a possibility, not probability, and I don't care about possibilities. So now you go through the exercise, of course, and check as you again page 1 in your guide. I'm jumping back to that. What you would have done now is gone through weekly, and you'll do this. Now, you don't have to do it through lower time frames if you're happy that the weekly's established what the trend is. But now you want to go to the time frame that you trade in as an execute in. Where are you going to? A 5-minute chart. Well, here's what it looks like in the trend, right? Now you've got to scale it. Okay, but you've done your weekly work. And you now understand what it is you're dealing with. You're dealing in the end, essentially, of what has been a counter corrective move in the big picture on your 5-minute chart. So that means that, and you can see price action will favor any longs that you take in your 5-minute trading, and shorts will be faded quickly potentially. Okay, but again, it's up to your trading plan. So that's what it means. And here you can see on the 5-minute picture, you're mainly doing something. What is that? You're ranging. So you've got to now establish your range, but you can remember the workshop, go down to finer, minute details. This is where you get, and you could label things, I, etc. So what's the big 1, 2, 3, 4, 5? Well, that's the big picture. Now you can have your you can label it W, I, X, Y, Z, whatever, and you can establish on the 5-minute where your 1, 2, 3, 4, 5 is and where your ABCD is. Once you've done that, again, you will find where your next probability is. So if you came in on this candle and you'd done your homework, you'd realize that you shouldn't go short here. You should be looking for a long. Wow, now the alarm bells are coming on. Anyway, that's the clarity that I wanted you to have in the workshop, and I believe you've got it now. The rest is up to you. Homework, what you can expect from me, of course, is these indicators later this week. I'll send you an email and maybe one clarification email on something else in your guide if I'm not happy. But other than that, that brings you the full clarity that you should have. And if you don't, it's because of where you are in your trading, career, and things to learn still. Don't be hard on yourself. But this fits into the trend part of your analysis. It's really what you should be doing when you open a chart. Establish the trend. Don't trade against the trend. That's where you start. Then, of course, you start talking about your entry, what they would look like, when you would take your profit, or if it didn't work out, where you would stop yourself out. And that's how the two fit together. Have yourself a brilliant trading day and rest of week. This is Taz signing off, and I trust this clarifies it for you. Bye then.